People keep telling you, buy gold, buy stocks, maybe it's say 15% of your income, but don't be going anywhere near tech stocks because the AI bubble will explode. Let me be brutally honest. 99% of people giving you investment advice should not be giving you investment advice. I'm thinking of 21-year-old TikTok gurus or crypto bros. So using all of my 24 years of real investing experience, I'll say this: don't buy stocks until you understand what I'm saying today, because most people are buying stocks for the wrong reasons and losing money. In this video, I'm going to give you a simple investing strategy so you can invest long term. Part 1, what investing really is and why not investing is actually the most dangerous choice. Here's something that will probably annoy most of the people I know, the savers, or worse, the people I know who I'd call the spenders. Doing nothing with your money is not safe. It's a guaranteed loss. Inflation is eating your cash every single day. If you've got £1,000 sitting in your bank, it might only buy £800 worth of stuff in a few years. I have really good mates who have money literally under the bed. Not something I'd recommend. Look at what happened to me and my cousin when I was just 7. Long story short, we set his bedroom on fire in his granddad's loft, and his granddad wasn't very happy with us because he had a lot of money under the floorboards, hundreds of thousands. I don't think he's spoken to me since, and we'll leave that little story there. You might feel safe with money in savings or in a current account or under them floorboards, but you're actually sinking slowly. Here's the point I spend most days trying to drive home here on YouTube. We live in an economy that rewards asset owners, not workers. People who bought homes 20 years ago, they've doubled, even tripled their net worth. People who invested correctly in the stock market, 8 to 10% returns every year on average, salaries barely keeping up with inflation. If you want to escape the cycle of earn, spend, repeat, basically what is commonly known as the rat race, you must own assets. That's why investing matters. What about you? Are you an investor or a saver? Part 2, how the stock market actually works. The part people pretend to understand. Like me in 2011, when I thought reading the paper for like 20 minutes was enough to invest in the high-risk individual stocks. Unfortunately for me, it took me just 10 months to lose our life savings. Most people say stocks go up and down. I get it. No, you don't. When you buy a share of Netflix, you literally own a piece of Netflix. You're betting this company will keep creating value. And if it grows, your money grows. And there are only 2 ways to make money doing this. 1, the price goes up. You sell higher than you bought. 2, dividends. Some companies pay you part of their profits. Sounds simple enough, but here's where people destroy themselves. They buy individual companies thinking they're picking the next Apple. Remember BlackBerry? If you invested $144 in 2008, you'd have about $4 today. Most retail investors get it wrong and lose some or all of their money with individual stocks because it takes serious time and effort to get good at it, and most people can't be asked. Like me when I was absolutely clueless back in 2011. Even the biggest companies in the world can fall off a cliff. You don't need to be smart to avoid this mistake. You just need to stop trying to be a stock picking genius, and please stop listening to the lads at work. If this info resonates, by the way, if you want to know how to invest long term, hit subscribe, and using 24 years of real investing experience, I'll do my best to help you step by step. Part 3, the smart investor's shortcut. Here's the real strategy wealthy people use. They don't try to pick winners, they buy everything through an asset called an index fund. It's a basket of hundreds, sometimes thousands of companies all in one fund, like the SP 500, the 500 largest US companies, Apple, Amazon, Tesla, Google, all in one. If you invested £100 in the SP 500 in 1996, today you'd have well over £1,700. A huge return, around 10% a year. No stock picking, no guesswork, just time and diversification. And here's another thing that might shock some investors. The Magnificent Seven, they won't dominate forever. In 1980 to 2020, the biggest companies constantly change. GE, Walmart, Exxon, all replaced. Go back further, Kodak fell 90%. Index funds protect you from this. And because the US isn't guaranteed to lead forever, you can even diversify globally. And if you're wondering how to pick the right index fund, don't worry. I'll be getting to that in a few minutes. Part 4, how to actually start investing. Here's the step-by-step plan. Step 1, pick a platform. Regulated, low fees, and check for tax-efficient accounts. UK, you've got Stocks and Shares ISA, Canada and Australia, TFSA, Japan, NISA, workplace pensions, even better if your employer matches contributions. Step 2, deposit your money. Bank transfer, debit card, simple. Step 3, choose your investments. Start with globally diversified index funds, not individual stocks. You will almost always make more money this way than trying to create your own little portfolio of companies. Step 4, automate it. Set up a monthly direct debit, £100, £200, whatever you can afford. This is called dollar cost averaging, and it smooths out the market and prevents emotional mistakes. Automation beats intelligence. And if you want to know some of my biggest mistakes over the last 24 years as an investor, see below for a recent video. Part 5, what if the market crashes? Here's the truth. The biggest danger to your investment is not the market, it's you. You'll see someone on the news saying the world is ending. You'll panic, you'll sell, and the market will recover without you. If you invest in diversified funds, you're protected. You're spread across hundreds of companies, even thousands. Crashes feel scary, but history shows they recover every single time. And worst case, you're buying more shares at cheaper prices through your automated monthly investing. That's how wealth is built. What I've just said is the short version of how you can invest in any market conditions. If you want more info on this very important topic, again, see below for yet another video I'm trying to get you to watch. If you watch one of the videos below in the description, I'd be very grateful. And if you get in the comments, I'd be even more grateful. Yes, I am trying to grow my little channel, and I do need your help and support, but I genuinely care about other people, and hopefully that comes across in my videos. Summary. If you've been wanting to invest but didn't know where to start, I hope this gave you the confidence to take the first step. The main point I'm trying to make is please learn from my huge mistake in 2011. Remember when I lost our life savings investing in the stock market with zero clue what I was doing? What I failed to mention was that my wife was due to give birth to our second daughter, and we were about to move into our second home. This led to loads of arguments, loads of stress, and I wouldn't recommend it. If you do insist on starting with individual stocks, individual companies, do the research, put the work in. But honestly, I think index funds are the perfect starting point for anyone looking to invest in the stock market. Now you've got to think about what index funds suit you as an investor. If you see below, you'll find a recent video where I go into how to pick the right index fund and why.